Hello friends, welcome to your channel FINOMENT. Today we will be discussing the FD beating return funds. That is, we will discuss the best fund that are better than the fixed deposit. In totality, we will be discussing the 6 fund, but in this video, that is part 1 video, we will discuss 3 best fund, and in next part, that is part 2 video, we will discuss the remaining 3 funds. So let's start the video. These mutual funds are based on the equity saving category. So before moving ahead to discuss the best fund, we will first understand the equity saving fund introduction. So these are basically a hybrid funds that invest in the 3 asset class, that is equity segment, debt segment and arbitrage security, that is derivative, future and option. These are done to hedge the position. So there you will get an exposure of 3 asset class: equity, debt and future and option. So because of this, your portfolio get properly and well diversified. Approximately 30 to 35% is invested in the equity and balance amount is invested in the debt and arbitrages. So now what are the benefit? So by investing into the equity segment, it will help us to beat the inflation. So during inflationary period, it will helps to generate the better return out of equity segment, and during market is falling, when in that case the debt and arbitrage segment will help us to act as a support or a cushion to protect us from the downside volatility when market is getting falling. So in such situation, debt and arbitrage will play us crucial role to protect our return, and as a result of this different asset classes, our return will be balanced, that is maximized, and portfolio risk will get managed. This fund will give a reasonable capital appreciation, that is in the form of return from equity segment, and with steady fixed income, that is from the debt in the form of interest, dividend, etc. These funds are suitable for the investor with the moderate risk profile. So these are not high risk, high reward fund or low risk, low return fund. These are medium risk, medium return funds. Equity and derivative exposure is cumulatively considered as a equity segment only, and hence these funds are called as equity oriented fund, that is equity fund. Even though there is a debt portion in this fund, it will still be considered as a equity fund, and for taxation purpose also this fund will be considered as a equity fund, and hence if you hold the funds for more than 12 months, then it will be considered as a long-term capital gain and will be taxed 10% if your profit or gain is more than 1 lakh rupees. If it is a less than 1 lakh rupees, then there will be no tax. And if you hold the units for less than 12 months, that is 1 year, then it will be considered as a short-term capital gain, and on which 15% tax is leviable. And these are not ELSS fund, name similar to the ELSS, that are equity tax saver fund, but this is a equity saving fund, and as a result of this, there will not be any lock-in period. So there will not be any lock-in period. You would withdraw the money anytime whenever you require, but in tax saver funds there is a lock-in period of 3 years. So now let's discuss one by one fund. So on the number 1, it is Axis Equity Saver Fund. The benchmark index for this fund will be Nifty Equity Saving Index. Present NAV of this fund is around 18 rupees. The fund size is very good, that is 1198 crore. Expense ratio is very reasonable, that is 0.85%. There will be exit load of 1% if you redeem the units within 1 month. So normally no one can buy the mutual fund for 1 month period. So if you withdraw the money after 1 month, then there will not be any exit load. So it is almost as good as nil exit load only. If you withdraw the money even within 1 year, there will not be any exit load. You can start this fund with minimum SIP of 1000 and minimum lump sum amount of 5000 rupees. This fund was launched around 6 years back. Now the most important part comes in this video. as you can observe, you will get around 11 to 12% consistent average return in 1 year, 3 year as well as 5 year. So this you can say that this is more than double the FD return. In 1 year this fund has delivered average return of 11%, in 3 year also delivered average return of 12%, and 5 year also average return of 11%. So by getting average every year, 11 to 12% return is much better than the FD. FD just provides the annual return of around 5 to 6%. So this is double the FD return. So this looks attractive when you invest in this equity saver fund. Now next number, it is Kotak saving fund. The benchmark will be same. NAV is 19 rupees. Fund size is around 1700 crore. Expense ratio is a little bit on a higher side, that is 1.15%. Exit load is 1% if you redeem the units within 1 year. Here there will be a exit load of 1% if you redeem units 1 year. If you redeem after 1 year, then there will not be any exit load. You can start the SIP with 1000 rupees as well, and you can start the lump sum amount with minimum 5000 rupees. This fund also launched around 7 years ago. Now most important, 1 year return, this fund has delivered 12%, 3 year 11%, and 5 year 10. So with the range of 10 to 12%, you will get a return, average return every year. So this is also a very good fund from the Kotak group. Now on the last number, it is DSP equity saving fund. Benchmark will be the same. NAV of the fund is around 17 rupees, and fund size is very on a lower side, that is just 390 crore approximately. Expense ratio is looking very attractive, just 0.72%. Here there will not be any exit load, nil. You can withdraw the money at any time with zero exit load. Minimum SIP is also very affordable, that is just 500 rupees, and minimum lump sum is also attractive, just 1000 rupees, and this fund is also launched around 6 years ago. This fund has also performed very nicely. It has given around 12% return in 1 year horizon, and 11.5% return in 3 year period, and 9% return in 5 years. So around with the range of 9 to 12%, you will be earning average return in every year. If you feel that video is useful to you, then please do like our video, and please subscribe to our channel FINOMENT if you have still not subscribed it, and press the bell button so that you will get the notifications for the next videos. And also please comment it in the comment box on which topic you want to watch the next videos.